start recording. Let me see if I can do that.
I'm gonna work on building out this Top Step Combine challenge page real quick since I'm starting tomorrow while we're on this. So
Okay.
if you need me, just call me on.
Yeah, we're solid. Me and Nick will get things started, and then I'll pull you on in a little bit here, and we can kind of get things going. All right, guys. So we'll kind of start the lesson off today. I'm just going to do some trade reviews from some stuff I'd sent out this week. Just kind of touching on the CAD JPY trade, that GBP USD trade that Troy called out. I'll kind of just walk you through what I saw on it and just kind of give you some information on that so we can kind of, give you guys some more insight on that. And then I'll let Sensational take over. He'll kind of walk you through his kind of Elliott wave theory that he's been kind of, drumming up with that and walking you guys through how he kind of configured that to his own style and has been using it to make those huge gains and whatnot. So let me go ahead and share my screen. And then towards the end, Troy's going to just kind of walk you guys through funded trading and stuff like that, because I know a lot of you guys have questions on, what it means to be a funded trader, how to become one, and just kind of touching on like different sources you can use to become a funded trader, because there are a few different I want to call them like brokerages, but not necessarily brokers, that kind of have all that set up through them. So let me go ahead. Okay. All right, let me see. All right, so you guys should be able to see that now. Okay, so we will go through the GBP USD trade. Obviously, this was a pretty good trade. I got stopped out at break even because I moved my stop up a little too early. After we kind of had this big up thrust right here, I moved it to break even and then got tapped out. Not a big deal though, because it's the beginning of the year. I wasn't expecting too much, but still kind of a bummer. So we'll kind of just start on a higher time frame, looking from like the 4 hour down. Walking you guys through that. So when he called the trade out, it was around, I want to say right here, after that 4 hour drop. Really with this trade, what I was looking at was, I kind of have it marked out right here. We have that, trend line right here that kind of shows that when the dollar was weakening, this was pushing up. And so we had the tap right here, consolidation up to the top. Obviously, we have these equal highs, which is I'm not going to get too much into that because it's a little bit more advanced, but we kind of have these equal highs up here and then drop down again, consolidated up into this area before we drop back down and broke that trend line. Typically with something like this, I know you guys, a few of you know that I trade an institutional method, and so when we have these equal highs up here, what I'm looking for is that liquidity sweep that I talk about. So basically you have this double top, break from the double top, and then essentially when big banks come in and stop out retail traders, what they are looking to do is push price down in one direction, buy into it at one point, and then thrust price back up to the upside before they short that position again. So overall, looking forward, personally, I'm still a little bit more bearish on this, but obviously, moving forward, we're just going to kind of have to see how the market plays out in the next week or so, because obviously we have some big news coming out towards the end of this week and some other stuff. So something like this, we had that liquidity sweep to the upside and that drop. So typically when you get something like this, where we have these equal highs and, let me see, we have these equal highs right here and broke the trend line, typically with something like this, you're going to have a retest of this equal high right here before they'll kind of scale into that position and short again. So if we go down to the 1 hour, what I was looking at right here is this is the 200 exponential moving average right here. And so when I saw that we had this order block right here, we have this 200 EMA right here, and price reacted off of that pretty strongly and held that zone before we could get into a buy position. So what I was looking for was this strong candle close right here. And then if I push price forward just a little bit, we had another strong reaction off of that again. I want to say this was into the close of London session. So I wasn't expecting a ton of liquidity in the market or any real big moves pushing price higher or lower. Because typically when you have this hard drop like this and then we get this consolidation off the 200 EMA, most of the time price will tend to consolidate once the London session closes, and we'll get that spike to the upside later on. So with something like this, I wasn't expecting to jump in too head first, but if we push price forward, we kind of get that secondary candle confirming that we're still holding that line and continually kind of going in. So my entry point, if I scroll down to the 15, my entry point was around right here. So after we had that big up thrust candle right here, I was confident in continuing the long position that Troy called out. Obviously, we're two different traders, so we do have a little bit different methodology as far as entering trades. But when my strategy pairs with his, I'm more confident in, taking those buy positions or sell positions. So with something like this, we had that upside move, and then I want to say once we got, let me see. Trying to remember where I got stopped out at. I think it was this candle right here stopped me out because I was thinking that we were going to continue higher off of this candle, and I moved my stops up way too early. And I think this candle right here was the one that stopped me out. But essentially, we're kind of getting that consolidation right here where we're just kind of ranging up. With something like this, most of the time retail traders will consider this a bear flag pattern, meaning they think that it's going to continue the short position. But because I had so many different biases saying that this was going to continue long, I was more confident, obviously with having you guys stay in the trade and stuff like that on that alert, than saying, keep your stops tight or anything like that. So with something like this, I was fine with you guys keeping the trade going. Obviously, Troy kept the trade. I know a few others kept the trade as well. But with something like this, if we push price forward, we had that big up move right here. So once we broke this high right here, with a strong body close of this candle, you can be more confident in continuing the long position. If we push price forward even further, obviously we drop back down and go right back into where we entered the trade at. So obviously if you'd move your stops to break even right here, you still would have been stopped out. But if we just continue price upwards, we have that secondary touch at the bottom, and then we have that big up thrust to the upside. So obviously this is a double bottom right here, push price up. Obviously we have these EMAs kind of curling up, and I've talked on this before, but for you guys that don't know yet, with something like this, when you have this 50 EMA right here squeezing into the 200 EMA, if these cross right here, typically the buy position is going to be more influential. So with something like this, when you have that cross, or we're starting to get these two EMAs squeezing together like this, typically that long position will continue up, and vice versa if it was a short position. So if this was the opposite and this was squeezing to the upside, then short positions would be more intact with something like that. Obviously with something like this, if you had your stops to break even, obviously you would have been stopped out, but if you just kind of left it where it was, about 17 pips away, you would have had that position just run straight to take profit. I know Troy got in a little bit earlier, so his was about 92.5 pips, but where my take profit was about 80 pips above. When I called it out, it was at 60 pips, but obviously, when you see these these strong movements like this, you want to move your take profit up just a little bit, especially when we have this range right here as an area of interest to continue that strong push to the upside. So something like this, you can move your take profit up higher or just take partials as price moves up to the upside. And if you guys don't know what taking partials means, obviously just kind of note that down, and we'll touch on it in a little bit, or towards the end of the lesson when we do the Q&A, you guys can ask that question. But essentially something like this, when we have where price pushes to the upside, has a strong body close above the previous high, and then obviously continues to the upside, that's a pretty good win for the start of the year. I know me and Nick last night took shorts off of this, and the reason we took these shorts was because right here we have that 50 EMA pushing downwards, and it lines up with that 382 Fibonacci level, which when you have something like that, obviously some of these strategies and stuff like that I'm talking about are a little bit more advanced. But with something like this, you have that 50 EMA closing down with that 382 level right here. Sorry, guys. So with something like this, we had that 50 EMA closing downwards with that 382 level, so me and him were both kind of confident in a short position. I only took profits at about 15 pips, but I know he let his run a little bit higher. Something like this, obviously we have those lows right here, so this one, in my opinion, would have been hard to target a take profit unless you were expecting something off this 200 EMA right here. But for me, I couldn't really identify a good take profit, even on like a lower time frame like the 15. You could have targeted these lows right here because this is kind of an area of interest for me in this area right here. But overall, I couldn't really identify anything, so I just took the quick scalp and let it be. Even on the 15-minute time frame, if I delete this and we look at this, on the 15 we have this kind of indecision candle right here rejecting off of the 200 EMA, so that short position in confluence with the higher time frame analysis, the 50 EMA being the same area on the hourly, and then also that 382 level, that can kind of show confidence in that kind of scalping short position. But something like that I wouldn't recommend for new traders. So if you have questions on that, obviously we can go over that in later lessons.
Yo, Preston. I just wanted to explain, because I'm sure a lot of the people got kind of confused on how I didn't get stopped out when I moved my stop loss to entry.
Yeah.
I moved my stop loss to entry after take profit 2, which for me was 1.361. So you can see like kind of on the top of those like rejection areas, basically at the bottom, I can't read your screen perfectly, but you can put it at 1.361. And you'll see that's why I didn't get, like, that was the final push up until we took take profit 3 at 1.3635. So that's why I didn't get stopped out on the movement down, which happened overnight in the Euro session. I actually moved my stop loss early this morning to my entry point.
Oh, okay.
I just wanted to make that clear so that like people didn't think that I would have gotten stopped out had I moved it, because mine was on the final push up.
Yeah, like I said, something like that. I just kind of goofed on that trade where I just moved my stop loss a little bit too early. But with like what Troy said, he moved his later on. Obviously, something like this kind of drop right here in this area was actually during the London session. So I think this was the start of London right here, and the close was about right here for me. Obviously, this is kind of a choppy zone to try to trade the Asian session through, but if we drop down to like a 5-minute chart, we have that double bottom right here, and obviously we're still pretty bullish on this trade. So on that double bottom confirmation, you could have entered a secondary position right here and then still ended up catching this 80 pip move to the upside. Obviously, I wasn't awake during this trade right here, so I wasn't worried about it. But or maybe I can't remember exactly when that happened, but essentially, you have another confirmation to the long position.
Yeah, this trade's actually about to move. I might re-enter.
You think?
Because now we have support, like a lot of it.
Let's hop back out.
Part of the reason I'm thinking that is because volume's moving right now too. I might wait for it to come back to the 1.31 or the 1.361 zone that we're looking at right at the top of your box that you just had drawn.
About right here?
Yeah.
Yeah, it's not a bad area actually, just because we have this 50 EMA cross to the upside. Like I said, we do have, essentially, if we look at this is kind of more of like a break and a retest strategy. So, we have these lows right here that become support after we break above them. We tested down to the low side, broke above a secondary time. We have this confluence right here. And then we also have that support that was previous resistance, but now is once again support. So, that might not be a bad trade to enter. Only thing for me is if I scroll out to like a 1 hour, because we have this rejection of the 618, I probably won't take it, but Troy sees different things than I do. So that's why it's nice to have traders with different strategies, because we can add to the mix and kind of give you guys some different insight on trades. This doesn't line up with how I trade, so I probably won't take it, but with Troy's strategy, it works for him. So
my strategy, I would be taking a short on that, and I'm going to explain why.
Yeah. Let me see. Okay, we're going to hop over to CAD JPY real quick, and then I'll let you take over, Nick. So this trade right here, this was kind of a doozy for me just because I went against myself on this and kind of sucked. But essentially with this trade, we took this, I had this short position lined up the other night that dropped roughly 55 pips right off the bat. I think this was actually during London session as well. With this, the thing that I kind of messed up on was, obviously I'm not going to get too in depth with you guys because this is definitely a more advanced strategy. I know ESAT trades the same way, and then I've kind of gone over lessons before. But essentially what I look for in something like this is right now we have this kind of a big drop move to the downside. Obviously that was the short position that I sent out. But right now we have this upside move right here. We have this 5-minute order block down here that originated this big strong move to the upside before we consolidated during the Asian session in this little range right here. What I was looking for at the start of London Open was I wanted to sweep these lows right here because we have the support that was these equal lows. So I was hoping that price would reject off that, drop down, smack my entry position, and then go to the upside. But unfortunately, it kind of just hit my entry point and stopped me out. In reality, what I should have been doing was having 2 entries. I should have had a half risk right here, meaning that I should have entered half of my position size off of this entry point right here, and then my other half would have been down here. But I went against myself on this trade and ended up just taking the loss. Essentially, it was break even because it was only like 2 pips. But with this, I should have just had half risk up here, the other half down here, because for me, this bottom zone had a lot more confluence with it than the top one did. The top one was more or less just a 5-minute order block. And so with something like this, because we had that strong move to the downside on the hourly, I should have just had this position open, but I canceled this position and just took this one instead. Essentially with this trade, we have basically 3 different order blocks lining up right here. If I go down to the 30-minute and scroll over, we have this 30-minute order block right here, which I have marked out with the, we'll make this box white. And then inside that, I have a 5-minute order block and then also a 15-minute order block, which was this black zone right here. The 15-minute was more influential to me just because it was the origin move to this big up thrust right here. And then obviously that 5 minute order block still would have been tapped into and had a better entry point with about a pip difference. But in reality, I should have had the entry point down here, left it, and then this would have run roughly about 51 pips to the upside with very little drawdown. Stop loss was about 5 pips to the downside on this one, and would have been about 11 on this one. So, just kind of a lesson learned on this trade that, when you have this confluence and you have these other entry points right here where you have other things lining up, such as like this 30-minute order block, the 15, and then also the 5 minute all in one area. In reality, I should have just kept that position and then just let price do its thing, because a 5 pip loss really isn't anything in my opinion. Obviously for smaller accounts, it still isn't that much, honestly, but it can definitely affect things. So with something like this, it's just a learning lesson that when you have confluence, don't go against yourself. And then also, Nick also had, or Sensational also had kind of the same bias on the bullish direction of CAD JPY. He took profit up in this area, which, I kind of let you guys know in the Forex chat that this would probably be a key area. Reason being, if I pull out the fib tool and go from high to low, we have this 200 EMA lining up with the 50 fib level. And so in reality, when you take your buy position down here and let it run to the upside, if you have that confluence where we have the 200 EMA and the 50 fib in one area, I've talked about this in other lessons, but just to kind of give a recap on it, typically when you have this strong drop to the upside or to the downside, most of the time price will tend to recover that move, at least 50% of it. A lot of times it can recover to the 618 level, but most of the time with something like this where we have that confluence, the 50 fib level would have been more influential to me to take profit right here if you were in that buy position. But you also could have shorted that down below these equal lows, which right here, like I show, there's liquidity down below this, which once again, you sweep these lows, take the buy and go up. So that was another confluence for me for this order block. But yeah, just kind of give you guys some insight on why that ended up taking his stop loss out. Obviously, like I said, he took profit right here, but if you just left the trade running and didn't have a wider stop loss or had entered down lower or something like that, then that could have taken your stop loss out. So that's kind of frustrating for a lot of new traders, especially when you have that big up move after it takes out your stop loss. But just a learning moment on that trade as well. I won't go too in depth because I want Sensational and Troy to kind of run a little bit more of today's lesson so you guys can hear from them too. Obviously, you hear a lot from me, so I want them to kind of take over and just give you guys some more insight to their strategies. So I'm going to end my stream and let them take over. Like I said, we're going to do a Q&A at the end, so if you guys have questions, just keep them logged and then ask them at the end, and we'll kind of go over those.
Okay, I'm going to get my screen sharing.
Yep.
You guys see? Okay. So today I wanted to show you guys my strategy, how I trade. It kind of goes with what Preston was saying, how price pulls back 50 to 61.8% before continuing in a direction. So the patterns that I look out for, I wouldn't call these Elliott waves. They're more, because Elliott waves have a certain rule set. These, I would just call them waves. So how it works is you have a move up, 50 to 61.8% retracement, move up, 50 to 61.8 retracement, and then 0.5 is where your trend ends. And then once 0.5 completes, you have three different patterns that can play out. I'll draw them out. So the first pattern is you'll get an ABC pattern to the 50% of this entire move. 50% retracement of this, then a 50% retracement of this move, down to the 50% of this. After that, you usually typically get a bullish rally from point C back up near point 5. Another trade or another pattern, this one's a little more rare, but you'd get a 50% rally down to the 50% of this move, and then you'd get a rally back up to the, and then the last one is it could go straight down to the 50%, bearish momentum down, and then an ABC pattern back up to 0.5. So what I usually do is I'll play on these retracements. I'll buy the 50%. I'll ride it to the previous high, buy at the retracement, target the previous high. And I'm going to show you some actual examples of how that plays out. So this is Odd Frank. And right here is the start of our trend. So this would be our first point. Point 1, 2, 3, 4, and 5. Let me go down to a smaller time frame. So each of these points should be a 50 to 61.8% retracement. This one's a little bit past 61.8. This one's a 61.8. And then the last one's where it completes at. So this is the entire completed pattern. And once you hit that 0.5, you have a solid move down, which is a 50% retracement of this entire move. And then you have an ABC pattern going back up to 0.5. A, 0A, B. I forgot to mention, this doesn't work on stocks. It works so well on Forex is because Forex has a larger liquidity in the market. And so price stays pretty consistent. So that's why you always see the retracements hitting these certain points. And like, for example, right here, even this is a 50% retracement. Now you don't just buy it every 50 and 61.8% retracement. You need RSI confirmation with it. So like right here, that would be a little bit past the 50, pulled right down and then back up. But you saw a reaction at the 50% level. And then let me show you. This is one that's completed. So right here, from 0 to 1, 61.8 retracement will land you at 0.2. 2 to 3, if you retrace that, 4 would be 50% retracement, and then it completes at 0.5. This one is that pattern where it has that V-shaped momentum. So you have your move, and then you have a 50% move down and a straight move back up to the 5. But right here is where I wanted to show you guys that it doesn't always hit 0.5. It's the general area, because I've seen it go just below. Let's see. So whenever you target this area, you'll usually draw a zone close to the previous candles. So I've seen it go barely touch the beginning of the zone, and I've seen it go all the way up to the 5, like in that other example. So it kind of just depends. And whenever you get to this last point, this entire pattern is completed. And so the last example I wanted to show you guys is we're talking about GPUSD. Looking at it right here, start of the trend. You have a 61.8% retracement. So if you were there at this point in time, you could buy right here and then target the one. The reason I don't target the next high is because it's easier to tell where price has been than where it's going to go. So then you'd have a retracement from 2 to 3, it's 4. Right there. It's like a fifth in between 50 and 61.8%. And then right here, 0.5 completes. Now the pattern that I'm expecting, you always expect a 50% retracement of the entire move. So what this is starting to line up to do is we're starting to see an ABC pattern. You have a move down, a move up, and I'm expecting it's a little bit of a stretch. Let me go in a smaller time frame. Something like that, because whenever you retrace 5 to A, you can see that we get a rejection on the 61.8. Oh, let me move that down a bit. We get a rejection on the 61.8% level, not just once, but twice. So we can expect it to make that pullback to the 50%. Once it hits that 50%, taking a long position, looking to ride something back up here, targeting this area. And whenever you set your stop loss is 2, whenever you trade these, where's it at? So what I would do is first look for RSI confirmation, but let's say that RSI is telling us that it's most likely going to land at the 50. I would put my stop loss just a little bit past the 61.8% level and target up in this area where the previous highs were, near that 0.5. That's pretty much it. It's really simple. Again, after you have that completion, I'll just show it one more time. Pullback of this entire move, or you can have 50%, make that look prettier, 50% move down, and then A, B, C, somewhere up in here. Or you can have vice versa, where this would be over here. Oops, fix that. Have a move down to the 50%, and then a move back up. So it's pretty simple. Just know that everything retraces itself 50 to 61.8%. If you do see a 38.2%, let's say we're trending up, you see it bounce off that 38.2%. Two things: either the trend, or it's not done pulling back, which is one thing I've noticed, or that means that the bears aren't that strong, and it's just going to keep continuing higher and probably rally even stronger than before. That's pretty much it for my strategy. I can go more in depth next time on RSI confirmation, but that's pretty much it.
So I'll just kind of tag on to that too. So one of the things that, I've noticed with these fib levels and stuff like that, and I know a lot of people already know this, but essentially when you have those deeper retracements, so closer to that 61.8 retracement, typically that signals it's a little bit weaker of a move to the upside. So with something like this where, the 50 to me is a lot more key, and I don't use this strategy, but I use something a little bit similar as far as like the 50% level goes. So typically when you have that 61.8% retracement, to me that signals that obviously that there's still sellers in the market, but like so with this example right here, we had that strong down move and then kind of a weaker up move to the upside. But once we get that 61.8% retracement, to me it looks a little bit weaker just based on the fact that price pulled back a little bit further. The buyers were stronger up into the 61.8% level than they were weak. So typically with something like that, I wouldn't target a very far take profit off of a 61.8% retracement. Typically with something like that, I would want to target the recent low. So that 1.35420 level at the bottom of that move is typically, if I was shorting off the 61.8, typically something like that, I would wait for it to reach that level and then determine whether I wanted to just take profit right there with a manual take profit, or most of the time you can just use you can set your take profit to that level. It kind of just depends on the trader in that regard, but with something like that, I would not expect a further move to the downside just based on the fact that price pulled back into the 61.8% rather than something like the 382. If it was to reject off the 382, to me that looks a little bit stronger as far as the sellers go, because they didn't let the bulls push the market too high before they came back in and shut stuff down. So with something like that, just keep that in mind with using these fib levels. Is typically with something on a 61.8% basis, price most of the time won't pull back too far or push down too far, and a lot of times you can expect the market to reverse off that. That's kind of just something I use in my personal trading.
Preston.
Yeah.
Pat, I see entry if you're still looking at this.
Yeah, I was actually just looking at that same level because that
right there hit those EMAs and then drop lower.
Yeah, the 50 is actually a 5-minute order block as well, and if you scroll back to the hourly, that should recover the imbalance in that down move. Yep.
After this, I'm going to have to put an order in.
Like I said, with something like this, so guys, like if you're trading off these fib levels, just be aware that, off that 61.8% retracement, price isn't going to drop super far to the downside after that. At least that's kind of my experience with these fib levels. I only use the same three that Sensational uses. So, like an 886 level or a 786 level, something like that, to me signals that the bias direction. So let's say it, in this example right here where price, if it were to pull back to the 886 or 786 level right now, then to me that looks like the buyers are still a little bit stronger in this regard rather than the sellers. But if it were to pull back into the 50 level, then I would expect that the sellers are still intact and they're just recovering their position or getting that not necessarily a correction but a retracement. So with something like that, just use those three levels in mind. Obviously, if you use the 886 and 786, then more power to you. But from my experience, I just don't use them. So I wouldn't expect price to pull back into those levels. I would expect something in those three areas rather than the 886 or 786. Yeah, I would expect the 50 on that, Nick.
Yeah, that's what.
You could actually use just a tick below that. So the bottom of that candle, to the left, that kind of hammer-looking candle, just below the 50.
Just below the 50.
Right there, yep. So you could use the bottom of that wick as your entry point, in my opinion. Yep. Because that's the origin of the down move that broke structure to the right. So typically, just so you guys are kind of aware moving forward, all these price action lessons and stuff like that are going to be for the premium and basic members. And so make sure you guys, if you want to continue these lessons and learning these kind of different little tips and tricks, if obviously with the premium and basic memberships, you get access to all the other channels that we have. And then, moving forward with the analyst lessons, these are going to be only available to those two memberships. Obviously, me and Nick and I think Troy does too. We all have YouTube, so we'll still try to post free videos and stuff like that in there, but the actual lessons will only be for premium and basic members. Yeah, you can do it right there. But yeah, so like I said, with something like this, I kind of lost my train of thought, but yeah. So the after next week, so this is the last free lesson. We're going to try to do another one on risk management later on this week if we can. But essentially, with these kind of these lessons moving forward, we're going to try to just keep these just for the premium and basic members.
I can get started on what I was going to go over for the top step if you want.
Yeah.
I never have the ability to share. Honestly, Preston, can you just go into the top step challenge?
Yeah.
Basically, I'll just go over it.
Yep. Give me just a second.
Appreciate you, boss.
All right. Let's see. Okay. Let me just get this pulled up real quick, guys. Okay. All right.
Uzi's about to make an announcement in a little bit on more details, but while you're pulling it up, I'll just kind of get started. So tomorrow I'm going to start what's known as a funded trader challenge. And the platform that we're going to be doing it through is known as Top Step. You can basically compare Top Step to almost like a brokerage, and then the fact that you go ahead and log into MetaTrader through MetaTrader 4 through a login they give you, and then when you log into the account, it's going to have $3,000 in the account after you pay $165 to enter the challenge. If you use the link that I put into the Top Step Combine, which you'll see in a minute when Preston gets his screen shared, because I can't screen share mine, then you'll only pay $115. So we're going to go ahead and get that started tomorrow through Top Step. And what I'm going to do around 12 p.m. noon is go through the trades that I'm currently in. You might still see signals come in tonight and for the Euro session. And then leading up to 12 p.m. noon, and what we'll do let's call it 1 p.m. because I have morning class for my winter class. So we'll call it 1 p.m. that I'll go live and I'll start talking about the trades we have open, and I'll do a live entry for one of the trades in the funded account challenge, and then we're going to set the stop loss and take profit for the relative trade, and we'll go over exactly how much we have at risk, and we'll go over exactly how much we're looking to earn, and then we'll be able to get a good feel for how we're going to be trading throughout the challenge. Basically, what I'm looking to do is trade every single trade with the full lot. We're all going to have the exact same amount of money when we log in. It'll be $3,000. We're looking to turn that into $6,000, but Top Step operates on a per month, reoccurring charge. And I don't want you guys paying the amount if I'm not going to do it. I'm either going to do it or I'm not. And I'm pretty confident I can do it. So once we complete the full turnover of step one, you can see right here that Preston has it up, is the 300K challenge. So you complete step one with a max drawdown of $1,000. So for each trade, we're going to be trading one lot size. And my overall goal, it might not be perfect for every trade, is to have $100 at risk, aka 10 pips. And what I'm going to be looking for is a 1 to 10 risk reward. So for every single trade that I'm risking 10 pips, I'm going to be looking to clear around 100 pips. If you took the GU trade today, it wasn't perfect, but that kind of went around what our goal is. So if you're risking 10 pips at a full lot, you're risking $100. If you're trying to gain 100 pips at one lot, you're going to have $1,000. So obviously you're like, okay, what does this mean? We're looking to clear $3,000 for step one with a max drawdown of $1,000. So that means that if I hit one trade, my first trade,
for $1,000. I'll only need to hit another 2 of the same kind of trades until we're on to step 2 and almost procure our funding. So yeah, if you could go into that, that'd be. You don't have to log in or anything. I went in a little bit more detail on the actual Top Step Combine channel that was just added by Uzi today. It just basically outlines the stages and what you guys should be looking at. We'll all need to have almost identical entries. So if you're taking this challenge, you're really, really, really going to need to be on top of the signals that come in for this, because we're going to have the same exact profit and loss for us to graduate on the same time. So every time I enter, you'll be looking to have a matching lot size, a matching stop loss, and a matching take profit with matching entries. So if I split my full lot entry up into 3 with 0.03 or 0.33, 0.33, and 0.33, then you're going to need to do the exact same thing so that we can have the exact same trade running. We don't kind of want everyone doing their own thing. We want you guys to be on the exact same page as I am, because that would just kind of be ideal. We don't want everyone on the different pages. So that is essentially the structure of how we're going to run it. And in terms of time frame, we'll probably be trading on Monday, Tuesday, Wednesday, and Thursdays. I'm not going to open any trades on Friday, just solely because I feel like some of you guys might forget to close them, and that will disqualify you from the challenge. You'll lose all the money the 165 that you put in to enter the challenge, and then you'll have to pay again to reset your account, and you'll be behind. So that's the structure. If there was any questions on the structure, put it into the FX chat. I just want to go over that this is not an easy challenge. I've been trading for 3 years, and I call out a lot of signals. As you can see, I trade pretty regularly. I'm confident in all of my signals, but this is still going to be a very difficult task. I'm going to have to essentially turn over 200% in 1 month to properly complete this challenge. That's a huge, huge, huge goal, and I'm thinking and I'm excited that we can do it. But it's one of those things that if this is like your last $165, or you're brand new to trading and literally have no idea what you're doing, then I would recommend you maybe sit this one out. It definitely can be kind of overwhelming if you're not getting into the signals at the same time, and I know that can be kind of disappointing if you're not catching the profit we are and you're missing things. I would recommend you sit this one out if you're thinking that any of those might be a problem. So I want everyone who does it to be really happy. I don't want this to cause any problems within the group. I think that it's going to be a really fun and exciting challenge. I'm excited to run it, and I'm excited for you guys to have a look and see, kind of get a better idea of how to trade challenge accounts. How you trade a challenge account is very different than how you trade a regular account. I'll be trading in a very aggressive manner. The 1 to 10 risk reward is completely off kilter of what you would expect to see for scalp traders, or even from a long-term swing trader. We're looking to catch these huge market movements that are happening in the month of January. That in basically 1 day, we're trying to get in and predict retracements before they even happen. So like, to kind of go off of what Preston and Sensational were talking about in their trading strategy, where they kind of wait for confirmations to occur with the Elliott wave theory and different balances of Fibonacci levels. We're not using any of that. We're looking to predict a whole market movement before it even happens, and relative drops and spikes like 5 to 25 pips ahead of time before they even happen. So that's why we're using a really tight risk reward, and that's why we're looking to try and have that really high like volume of trades going on throughout this. You might see up to 4 to 5 different signals in 1 day, and that's not very reflective of my regular trading style. Usually I like to give you guys high win percent trades that are kind of more safe than these. And in this challenge, we'll be flying through different trades, looking for new trade ideas, trying to catch huge movements before they happen. So that's basically what I had for you guys. Obviously, I said tomorrow at 1 p.m. I'm going to be going live to go over one of the trades, and kind of, if there's any more questions before we get started, get those answered. If you have any questions that in terms of getting set up, shoot me a DM. But that was basically what I had for introducing the Top Step Combine.
So just to kind of piggyback off that, because I know a lot of you guys probably have questions and stuff like that. Obviously, I'm more familiar with FTMO, which once again is very similar to Top Step. The difference with FTMO is, I believe, the max account challenge. You can trial for is 100,000, not 200 or 300 or 500. FTMO has a requirement of $10,000 profit and $5,000 daily drawdown before they'll cancel your not necessarily membership, but your kind of challenge account. Just so you guys do know, the this monthly price and stuff like that, that's not refundable with Top Step. With FTMO, when you complete phase 3, which, like I said, I'm not trying to harsh Troy's vibe or anything like that, but FTMO is just another one that I'm looking into for myself. There's another one called City Traders Emporium, Top Step, 5%ers, and then I believe there's one other. So, there's many different outlets to become a funded trader. Each one's going to require different things. 9 times out of 10, the brokerage account or the hedge fund that you're kind of going with, whether it's Top Step, FTMO, 5%ers, whatever it may be, almost all of them use MT4 or MetaTrader 4. So if you're not familiar with that, make sure you guys kind of watch some tutorials on how to use those. They do have a demo account, so I highly recommend downloading that tonight if you can, whether it's through your desktop or your phone. Most of the time when I'm using my MT4 account, I will tend to use TradingView to make all my charting and stuff like that, and then I'll just place my trade on MT4. It's just something that I do personally, but obviously each person's different. Troy uses MT4 religiously, so he knows it a little bit more than I do, but most of the time when I'm trading or charting off of TradingView, I'll just place my trade on MT4, and really there's not a huge difference. I'm not sure, because
there's actually some questions in the FX chat about challenge. I guess I kind of was going quick. So the question was,
what is the reward when you complete the challenge? Obviously, this is probably the first thing that I should be taking care of when explaining this, is the 300K is the account that you gain once you turn $3,000 into $6,000, and then you go into step 2 and then do the same thing with a tighter drawdown. So basically, you're turning a $3,000 account into a $6,000 account twice, with one being stricter risk management. Either way, we're going to have really strict risk management because, like I said, we're going to have max drawdown of 10 pips, which should not be a big problem at all. We're going to be looking to clear bigger trades when we do win. So, we might start off with 2, 3, 4 losses, and then we'll hit our first 100 pip gain, and then we'll be in business. I'm looking to do this all in a month time frame to avoid the reoccurring charge, like Preston said, which is not refundable. And I'm trying to make it as clear as day that we do not want to go into month 2. That is not my goal at all. I'm either going to do this in a month or I'm not. So once you have the $300,000 account, if we can properly and successfully complete this challenge, then you get 80% of all profit generated on that $300,000 account. So you're basically just a funded trader. If you don't get any financial, like, hey, if you can do this challenge, you get $500, like, yeah, happy birthday, whatever, blah, blah, blah. Like you're a funded trader, and then you have to continue trading on that account to gain 80% of profit off of 80% of profit generated off the account. The first $5,000 that you generate off of that $300,000 account is yours. There's no $20 fee at first. So that is basically the end goal. I didn't want to get ahead of myself in explaining that, but that is the end goal. And you're paying $165, $115 if you use the link that I put into the channel. You pay $115 if you use that link, get $50 off. And you're paying $115 essentially to have that $3,000 demo account, essentially, is what it is. I'm pretty sure your reward is a percentage of your profits once you. Exactly. You're just getting like a funded account, essentially. I didn't know, like, some of you might not be familiar, which is why I tried to put it in layman's terms, but it's very similar to all of the different account challenges that Preston was talking about, whether it be on FTMO or the other one he had talked about, which I was unfamiliar with. This is one of the more popular ones because it has a futures option where you can trade gold and all of those other futures, which I personally don't, but that's actually how I stumbled upon this one. And I really do like the account 300K. That's a huge account. So if if I successfully complete this, that is a ton of money that the group will have to trade with. I'm excited to see if that can happen.
So let's say does the $50 off also allow these? Because I'm not saying people will, but if someone were to want to just do the 200K instead, would they get $50 off on that as well?
Yeah. Should.
So if you guys didn't want to pay the 115 or the 165, whatever it may be, you could also just still do the 200K. Obviously, I'm not trying to say not do the 300K because obviously that's a little bit better. Extra 100K is not bad. But essentially, obviously, if you only had $75 or whatever it may be, and you still wanted to try out the account challenge, you would just want to take a little bit smaller position sizing than Troy does. Obviously, the weekly loss limit is only $650 on this account, and the account loss limit is $1,300, which is still a pretty significant difference between the $2,000 and the $1,300. Just so you guys are aware, because I know I've had this question before from you guys and stuff as far as funding goes, this account loss limit is not your requirement. You don't have to pay the $2,000 loss. So this 125 monthly fee, that's the only amount you would lose if you don't complete the account challenge. So if at the end of the month, if you lose the $1,300 or whatever it may be, the only amount you're actually out of, the only amount that you forked out personally would be the 125, not the $1,300. So I've had that question a few times by people kind of looking into funding and stuff like that. The account loss limit, you don't have to pay that if you do lose that. The only requirement is that 125 monthly fee that you would end up paying for the account challenge. So, if it only takes you 1 month to complete the challenge, then you're only paying the 125. And then obviously each phase is different, but as far as like the first phase goes, that's what your payment would be up front. And then if you don't complete the account challenge and you fail it, then you're only out the 125.
And I guess it's only 75.
Yeah, 75 with the 50 off, but yeah.
And they do have most major pairs. I confirmed today through MetaTrader 4 that they should all be there.
Yep.
And even have some FX crosses.
So they have most of them. I did notice right here they no hedging, so that means you can't short UCHF and then long Euro USD.
Yeah, I usually trade with the currency correlations anyway, so that should not be a huge problem.
Yeah. I know you're definitely different in that aspect, but that's just, I know a lot of people do try to hedge, so that's just kind of one thing just to keep in mind. If you guys do try to take this challenge, is no hedging is allowed. So you can't short UCHF and then long Euro USD. Obviously, what I mean by that is a lot of currency pairs, especially the majors, have inverse correlations. So typically when Euro USD is long, UCHF is a short pair. So, they're just saying that you can't long this to recover your short position on this. Do they have anywhere on the website where it kind of talks about the different phases, Troy?
Yeah, I believe it's once you sign up, it does. Let me see if I can't find it. I mean, really, those rules right there are all you need, though.
Yeah.
I think that it goes into step 2 a bit more. No, actually, this might be it. No, I think this is it. It's basically just in stage 2, you have a tighter weekly loss limit, which still, I'm day trading on this challenge, with high volume of trades. So most trades are not going to be left open for the full week.
Yeah.
They're all going to be closed for within 24 hours, pretty much, I'd say. So the risk management will not be the difficult part.
Yep. And then also, with the account challenge, obviously, if you guys aren't comfortable with, kind of jumping into this head first, because I know a lot of you guys are still pretty new. I think, Troy, you mentioned you were still going to be calling out the plays, right?
Yeah, exactly. The ideas for the trades will still be the same. I'll just have more of them. I don't trade with you. I don't share every single trade idea I have with you guys anyways. Like in the chat last night, I said I was in EU. EU went up overnight. Yep. For example, if I was on the account challenge, I probably would have GU, EU, and EG or some form of that all open at one time. Mm-hmm. That's probably not going to be the case with live signals. So there will still be live signals coming for you guys. It just won't be every single thing that I have open in a Top Step Combine.
Yep. I just wanted to make sure that people were kind of aware of that. But, if he does call out plays and you guys do just want to kind of hop on a play on your own personal account, then, by all means do so. Because obviously, like he said, he's going to have really well-managed risk management in this case. So, you're not going to be really worried about risking a ton of money because he's going to be, making sure that if he does post a trade, it's going to be high risk to reward.
Right. One thing I will say right away, and I'll probably need to make this especially clear in the announcement that Uzi sends out, is that don't get wrapped up in how many trades we win versus how many we lose. This account challenge is solely focusing on pip count and our returns from it. If I brick and go 0 for 4 in the first trades and we're down $400, it doesn't matter because in the fifth trade that hits, that's a 100 pip gain. We've just gained $1,000 and up 600. So don't get, if you're taking this challenge, don't get overwhelmed by losses. I mean, losses happen all the time in Forex. It's a huge part of the mentality that you have to have as a trader is that you're not afraid to take a loss, you're not afraid to cut the loss. And that you're going to be watching for new opportunities everywhere. That's going to be magnified times 1,000 in this challenge. It's really going to test you and your mentality if you're ready to open and close and take these losses at the point that I'm taking it at. It's going to be hard for a lot of you to see that. I'm sure none of you guys have traded with, some of you haven't traded with $3,000 before, so to see the $1,000 slip away out of the account might be too overwhelming at first. You're just going to have to overcome that and understand that these losses will happen in the trial. I'm not going to have a perfect record and get you guys funded in 3 days. The losses are going to happen. We're just going to have good risk management and have to trust your stop loss and take profit and analysis.
Yep. And that's with anything, not even just the account challenge, just having good risk management is kind of, in all honesty, the key to trading. You can be the best technical trader out there, but if you don't have proper risk management, then you'll never really succeed, in my opinion.
Agreed. Well, that was pretty much all I had. So,
yeah.
If you have anything else for him,
nothing right now. I'm going to end the stream real quick just to have that out of the way. But we will open the floor to a Q&A now so you guys can ask questions.